Ayo, what is going on with the viewers of the tube? If you are notified of this video, you know who I am. If you weren't notified, why not? Ring that bell, because my name is Tyler and you just entered the crypto channel that keeps it as hospitable than these good old Montana folk.
This looks nice, looks like a compulsory stop. Check out all this, eh? Oh, there's a man here filming a man. There we go. Thank you so much, guys. What do we got here?
Yeah. We're from Beach Guy Pilots here in Billings, Montana. We're out here to appreciate all your guys' hard work and everything.
Yeah.
There's a hot dog and hamburger in here.
Marvelous.
And then there's a bunch of other goodies in there. We're gonna go along with it.
Thank you so much, guys. That is spot on. This is from Montana, eh? These guys are the best. Cheers, guys. Catch you all later. Bye-bye.
Thank you.
How humble is that, eh? I just hope he sanitised his hands. But there you go, I'll have to sanitise that. Can't be too careful, can you? Very nice of him, that.
You know how we gift it. It's time for Chico Crypto. A gift? Yeah, that is what Chico Crypto is bringing to you, served sanitized, stanky, and straight up lanky. We haven't done a good old research video for some time since the craziness of the world took over, but the breadcrumbs have been being dropped day by day, and these crumbs actually connect back to the craziness of the world and the economic turmoil. What I'm talking about is the digital dollar and how blockchain projects are most likely connected right back to the USD's next transformation. So March 20th, I made my first video about the digital dollar when the Treasury Department announced the hiring of Brian Brooks, Coinbase's chief legal officer, who was highly involved in the legal red tape of getting USDC the okay from the mix of US regulators. And this was before the stimulus bill was announced. By March 23rd, there were draft stimulus bills with digital dollar language in them. So on March 25th, I put out my second video with even more research, finding out Brian Brooks is best friends with Steven Mnuchin Snoochie Boochies.
Snoochie Boochies.
And Brian is gung-ho on the private sector building the technology for the next US dollar, while the regulators and government should just set the monetary policy. That is from Brian's own mouth. And if you want my full research, both digital dollar vids are included down in the description. So there are many layers of this onion to peel back. Of course, there is the layer of the Federal Reserve, including the Treasury Department, but there is also the layer of the clearinghouse, and finally something called ISO 20022. What is ISO 20022? Well, it's a new global standard for payment messaging that really isn't new. It was created and first published all the way back in 2004 by the International Organization for Standardization. Yeah, the group that makes sure things are ISO certified in industries across the globe. So in 2012, the Fed created a stakeholder group whose goal was to assess the value of adopting this new ISO standard. This led to the publishing of a paper in 2015 titled Strategies for Improving the US Payment System. And in it, with the stakeholders, including the clearinghouse, they assessed ISO 20022 in a business case. And from the recommendations, the study concluded that a phased approach to ISO 20022 adoption should be employed in the United States to reduce risk and cost, which included 3 phases. Phase 1, education. Phase 2, adoption for cross-border payments. And finally, Phase 3, for domestic payments. Well, 3 years went by since that paper, and then in July of 2018, the New York Fed Board of Governors released this statement that they were looking to adopt the ISO 20022 message format for the Fedwire Fund service, as it would be an international standard that would replace Fedwire's current payment messaging format. And as we can see, the transition to ISO would take place in 3 phases, with the Fed beginning in 2020 and ending in 2023. Now here's where things really start to accelerate. November of 2019, Jerome Powell, head of the Federal Reserve, sent this letter to Congress. And it said in it they were exploring whether it makes sense to issue its own digital currency that could be used by households and businesses. It's a central bank digital currency, or CBDC. In the letter, Jerome says the Federal Reserve is not currently developing a US dollar CBDC, but continue to carefully evaluate the costs and benefits of issuing a general-purpose CBDC, defined as a new type of Fed liability that could be held directly by households and business. So no actual work on it in November, but they were talking about it. And remember, I said things accelerate fast. February 5th, 2020, Fed Governor Lael Brainard gave a speech at the Stanford Graduate School of Business. There was no recording, but the Fed has a transcript of the speech. In it, she talks about the digital players in the payment space, from technology firms, and the increased competition from them. Thus, the Fed needs real-time infrastructure. Lael says, "We are committed to closing the gap between the transaction capabilities in the digital economy and the underlying payment and settlement capabilities, recognizing that consumers and businesses across the country want and expect real-time payments, and the banks they trust should be able to provide this service securely." This summer, the Federal Reserve announced that it is building its first new payment rail in more than 40 years, the FedNow service. FedNow will facilitate end-to-end faster payment services, increase competition, and ensure equitable and ubiquitous access to banks of all sizes nationwide. Together, the clearinghouses RTP and FedNow are moving the U.S. banking system to real-time retail payments. These systems will enable consumers and businesses to settle retail transactions in real time, at any time, and allow them to manage their money with greater flexibility. RTP and FedNow should significantly increase the speed and efficiency of the U.S. payment system. She then goes on to talk about central bank digital currencies, how private banks in other countries like China are rapidly moving with their plans for a digital currency. She explains, given the dollar's important role, it is essential that we remain on the frontier of research and policy development regarding CBDC. Like other central banks, we are conducting research and experimentation related to distributed ledger technologies and their potential use cases for digital currencies, including the potential for a CBDC. We are collaborating with other central banks as we advance our understanding of central bank digital currencies. So the way money is going to move is going to change rapidly. FedNow and the clearinghouses RTP are in the works, and there's a potential for a U.S. central bank digital currency to move through these systems. And as we know, just a month later, in March, we had Brian Brooks brought on to the Treasury Department team, specifically to the Office of the Comptroller, reuniting with his old friends from One West Bank. And we know that Brian thinks private companies should build the tech while government sets monetary policy. What private payment organization does the federal government and regulators love? SWIFT, or the Society for Worldwide Interbank Financial Telecommunication. And you know SWIFT, they are the transfer powerhouse. According to the Treasury, they handle $5 trillion per day. And what has SWIFT recently said? Well, just last month, they announced their new approach to the ISO 20022 adoption, which gives banks a little leeway to fully adopt, pushing out requirements for banks from 2021 to 2022, but still sticking to their original roadmap of a complete overhaul by 2025. So now we know the Fed is getting an overhaul. FedWire, the clearinghouse, is getting an overhaul through RTP, and their favorite private system is getting redone. So what blockchain projects are involved with this? Well, from my previous digital dollar videos, we zeroed in on Coinbase's and their USDC. It's built and Brian Brooks was a big part of it. It's something that the Federal Reserve likes, a coin backed by their greenbacks. So this is definitely suspect numero uno. And as we know, USDC is an ERC20 asset built on Ethereum. So that is big news for the Ether crowd, if so. But in my personal opinion, the stablecoin isn't what we should be worried about, as I foresee many private organizations attempting to create their own version. As just 3 days ago, another company, NetSense, declared their readiness for the expected Federal Reserve digital dollar. Competition will be fierce, and there will be many stable options. But how those stablecoins are transferred is a much different story. So this goes back to SWIFT, the Fed's favorite private transfer system. Well, Swift is conforming to the ISO 20022 standard through Swift GPI, which they say will digitally transform cross-border payments. In January of 2019, Swift announced Swift GPI Link, a gateway that would enable GPI to e-commerce and DLT platforms, and the proof of concept would launch with the firm R3. Well, almost a year ago, in March of 2019, we got a very informative webinar between Swift and R3 that requires email registration to gain access to. Well, let's do it and skip to 1327 and begin.
Here we can see that party A delivers the asset to party B if and only if their bank account is credited with a Swift GPI payment. So you can see there's 3 parties involved here. The Swift GPI box is actually manifested as an Oracle service on a called a DLT network, and it would have access to the GPI link such that if you provide it a UETR, then you can check to see whether the Oracle can check to see whether that particular payment has settled or not.
Yeah, Swift GPI Link is an Oracle service. It's an Oracle that is system agnostic because they plan on working with a multitude of services, blockchain, DLT, and the new traditional ones like Fedwire. And it's so freaking easy to see. Just going to smartcontract.com, of which is Chainlink, you see their first partner. We're proud to be working with Swift on their own Swift Smart Oracle, allowing smart contracts on various networks to make payments, send governance instructions, and release collateral with over 11,000 banks, which Sergey, the Flan Man himself, has clearly explained.
My name is Sergey Nazarov, and we're here from smartcontract.com, presenting the work we did together with Swift, a working smart contract that was able to retrieve external market data and make payments using the Swift network. We did that together with a large number of institutions, together with Barclays, Societe Generale, BNP Paribas, Fidelity, and Santander. And this initial implementation that we worked on together with them was meant to show that you could have a smart contract send a Swift message. And that means that the smart contract can now make payments to thousands of bank accounts if a system like that was fully implemented, which greatly expands the capabilities of what the smart contract can do.
But that was back in the day during the proof of concept phase. Well, just 6 months ago, back in September, at a Chainlink meetup in Paris, something went quietly under the radar. Let's watch now.
The bank will do off-chain payments through Swift. Then this payment information will pass from the Swift API to the Chainlink Oracle and the Chainlink Swift Oracle. And lastly, this payment assessment will be connected from the Chainlink Oracle to the EquiSafe smart contract.
Yeah, the Chainlink Swift Oracle. So, from my research, we should be keeping an eye on a couple of projects. USDC, I mean, just look at the explosion in supply once news of the digital dollar started circulating, a growth of 62% in just a month. And USDC supply is at about 700 million. So something is bubbling regarding the stablecoin. But how the stablecoin is transferred, or others, or any asset for that matter, will be going through Swift GPI in the short-term future. And the GPI link reeks of chain. Cheers, I'll see you next time.